Hello and welcome to the show. Let us start with Wall Street. The three major indices closed essentially flat. The Nasdaq finished at 26,289.71. The S&P 500 settled at 7,691.76. The Dow closed at 53,343.40. This is a typical consolidation pattern near the highs. But the real signal came from the futures market before the open. Nasdaq futures were up 0.72% at 29,702.50. S&P futures gained 0.53% at 7,743.25. Dow futures rose 0.55% to 53,646. All three moving higher in sync, which suggests today's session is likely to continue on a firmer footing. On the stock level, Nvidia inched up 0.22% to 219.74. Tesla added 0.21% to 336.87. The big tech names are stabilizing. Crypto-related plays like IBIT and MSTR were slightly weaker, but the moves were limited. Nothing unusual in terms of individual stock moves yesterday. Now let us look at the macro picture. The 10-year Treasury yield fell 1% to 4.66%. This marks a continued decline, which signals a modest easing in liquidity conditions and provides support for growth stock valuations. The VIX dropped 2.21% to 15.49. That is at the lower end of the normal 15 to 25 range. Market sentiment is calm, no panic and no extreme greed. The dollar index fell 0.46% to 99.08, breaking below the 100 handle and continuing to weaken. That is a systematic positive for emerging market assets. WTI crude declined 0.64% to 84.11. Lower oil prices ease inflation pressure, which is positive for equities. Spot gold surged 2.18% to $4,486 an ounce, hitting a fresh stage high. Safe haven demand and inflation hedging demand are both rising. When gold breaks out strongly, it usually corresponds to a period of dollar credit weakness. Putting it all together, we are in a risk-on environment. Treasury yields falling, VIX at low levels, a weaker dollar, and stock futures moving up. These four signals all point in the same direction. Now the invalidation conditions. If the 10-year yield climbs back above 4.75%, or if the VIX quickly moves above 18, then the risk-on logic is broken and we need to reassess. Let us turn to China. The onshore dollar-yuan rate was at 6.7188. The offshore rate was 6.7284. The yuan appreciated 0.3% and 0.19% respectively. The yuan remains in a strong position. A weaker dollar combined with yuan appreciation will directly ease the pressure of foreign capital outflows. That is a positive for the valuation of core A-share assets. On the trade and technology front, there are no verified new developments. We are in a policy vacuum in the short term. With futures moving up, the dollar weakening, and the yuan appreciating, the A-share market is likely to open higher today. But we have to keep in mind the selling pressure from yesterday, when the Chi-Next index fell 6.26%. The question is whether the market can hold those opening gains. We need to watch the volume. If the offshore yuan quickly weakens past 6.75, or if northbound capital sees net outflows exceeding 30 billion yuan in the first hour, then the risk of a high open and low close increases significantly. Speaking of yesterday, it was a rough session. The Shanghai Composite fell 2.4% to 3,894.42. The Chi-Next index plunged 6.26%. The Shenzhen Component Index dropped 5%. But historically, after a panic sell-off like that, combined with an improving external environment, the A-share market today is likely to see a rebound and consolidation. The Shanghai Index should find support in the 3,850 to 3,920 range. The Chi-Next index should look for support between 3,400 and 3,520. If the Chi-Next continues to fall more than 2% on heavy volume in the morning session, that means the selling pressure has not been fully digested and the rebound thesis does not hold. In terms of sectors, we are focusing on two areas. First, AI computing power and the optical module supply chain. Global AI capital spending remains strong. Indium phosphide substrates, silicon photonics integration, and high-speed lasers are the key upstream segments. These names have already released a lot of risk during yesterday's sell-off. They should have the most bounce potential today. Second, precious metals and gold-related stocks. Spot gold jumped 2.18% to a new high. With the dollar weakening and real interest rates declining, the mapping effect on gold stocks should show up in the A-share market. On the flip side, be careful with theme stocks that have rallied a lot without earnings support. They still face the risk of further declines. As for northbound capital, with the yuan appreciating and U.S. futures rising, the probability of foreign inflows is higher than outflows. If net inflows exceed 20 billion yuan in the first 30 minutes, that confirms the return of foreign capital. Let me wrap up with the bottom line. Treasury yields are falling and the dollar has broken down. The risk-on window is open. An oversold rebound in a shares is likely, but the upside depends on volume. AI, optical modules and gold are the preferred sectors. Our probability assessment for today is 50% up, 35% sideways, and 15% down. That is all for now. Thank you for watching and see you next time.